So today I want to talk to you about Europe's biggest company. Many people would never guess that such a company can be the biggest company in Europe. And moreover, a lot of people know brands that are part of the company, but they don't actually know the sheer size and global power that company has to offer. And the company I'm going to be analyzing today is no other than LVMH, or Louis Vuitton Moet Hennessy. Well, excuse my French, I'm a German, so I hope I didn't pronounce it too bad. Just a few days ago, that company hit yet another milestone, being the first and only company in Europe that hit a market valuation of $500 million. I mean, that's really staggering. Of course, in the US, there are a number of companies, but in Europe, we never had a company that valuable before. And we can see this over here in more detail, the largest companies in Europe by market capitalization. So it's basically multiplying the shares times the share price gives you the total market capitalization of the company, so to say. And here we see it, LVMH, basically a French company listed in France at the Paris Stock Exchange. I mean, a global powerhouse. Obviously, prices are fluctuating. So when the article came out, it was a few days ago, the price was slightly higher. Now they dipped a bit under that, but still a staggering $486 billion worth of market capitalization. So that's really good. And the closest second is actually Novo Nordisk, based out of Denmark, which is a pharma company, and they're only at 370. So you can see quite a huge gap over there. And then we have another French company, L'Oreal, and we're the Germans. I have to scroll down quite a bit. Only in 8th place you can see SAP, which is also a huge international company, only 155 billion. So that makes you really appreciate how valuable that is, especially in European terms, because usually American valuations tend to be significantly higher. So when we look at it on a global scale, where LVMH ranks, these are the biggest companies in the world. Number one is still Apple, as it's been for a number of years now, closely followed by Microsoft. Then we have Saudi Aramco out of Saudi Arabia, obviously, and then a couple of other big behemoth companies. But even there, in international comparison, globally, LVMH, as you can see here, on number 11, just shy of Tesla. So they're really giving a neck-to-neck race here. But that's really amazing to see, being a European myself, that a European company can really compete with the likes of such companies over here. And yeah, hopefully in the future we'll grow even more and enter the top 10, top 5. I mean, that's really, really great to see. And funnily enough, as you can see over here, how Tesla and LVMH are running neck-to-neck in terms of company market valuation, even they're completely different industry. Interestingly enough, founders of those two companies have actually a controlling stake in the company and therefore makes them extremely wealthy. In fact, they are currently the two richest people in the world. But in fact, Bernard Arnault, who is the CEO of LVMH, is actually quite by margin the richest man in the world, with the wealth worth $236 billion. I mean, that's really staggering. And in second place, we have Elon Musk with only 167 billion, and then Jeff Bezos and others. But obviously this fluctuates quite often. Previously Elon Musk was in the first place. So it really depends on the share price of the company, because that has a huge impact on the overall net worth, of course. But interestingly enough, if you take his net worth of 236 billion, he by himself would in fact be the 37th most valuable company in the world, actually globally. So he himself, for example, is more valuable than the entire Bank of America. So that's really a staggering amount of wealth. But let's dive a little bit deeper into the group and what they do, because it's really a luxury behemoth, I would say. So here's the group presentation. And as it says over here, it's a family-run group. LVMH was led by Bernard Arnault, the founder and CEO, since 1987. Obviously, it's a stock-listed company, but majority of it is still run by the family. And I always think it's a good thing. And now there's actually a generational shift going on. I'll come to this in a second, but it's really good to see that a European family-run company can really compete with the big boys in the world. These numbers are from 2022, and they made a revenue of 79 billion euros. I mean, it's just a staggering number that they generated in 1 year. In total, they have close to 200,000 employees and 5,664 stores. And keep in mind, most of them are really luxury stores. So it just shows the sheer size they have. Now here are all their houses, or maisons as they call them, 75 of their brands, you could say, in different categories. So they have 5 main categories, starting with wine and spirits. Some of those names are absolutely famous. Everybody knows them around the world. But honestly, I never knew they're part of LVMH, to be honest. Brands such as Dom Pérignon Champagne, Ruinart, Moet Chandon, Hennessy, Veuve Clicquot, Artbeck, Amazing Whiskey, Krug Champagne, Chandon, Cloudy Bay, Belvedere. Then we move to fashion and leather goods, which is actually the strongest category. And here you have a number of big brands that you would definitely know. Of course, their flagship brand, which is Louis Vuitton, Berluti shoes, Rimowa bags, Loro Piana, Fendi, Celine, Dior, Givenchy and Marc Jacobs. And then we move to the perfumes and cosmetics. Brands like Acqua di Parma, Fenty Beauty by Rihanna was recently added, Stella McCartney. Then we have selective retailing, things like department stores, Le Bon Marché, DFS, which is actually one of the biggest duty-free shop retailers around global airports. And of course Sephora, which honestly I also didn't know that they're part of LVMH. I mean, they're pretty much in every big cities where the ladies go to buy the perfumes and whatnot. So really incredible. Then we move to the watches and jewelry, Tiffany & Co. They own Bulgari and Hublot as well. I mean, unbelievable brands. And a couple more which they call other activities. And here for me notably Belmont and Cheval Blanc hotels. I mean, just Google Cheval Blanc hotels. I mean, mind-boggling hotels, which are basically designed with Louis Vuitton interior. I mean, absolutely stunning hotels in amazing locations around the world. So just looking at these brands, you can really understand how big of a company they really are. Let's have a look at some of the key figures. Now, these numbers are from 22, but they do give you a good indication of how the company is going. Obviously, they call themselves the #1 world luxury leader. That's really their category, to go after the luxury market. They're not mid-market or entry category. They're not aiming to go that, even though they have a couple of brands that could be considered mid-level luxury. But essentially, they're really going after the highest category of luxury across different categories. Currently, they have 75 houses or maisons, as they call them. And that's a really interesting chart where you can see how the revenue is composed of. So you can see clearly the biggest part comes from their fashion and leather goods. 49%, almost 50% of their revenue comes from that. Of course, the biggest one of them being Louis Vuitton, but then you have Dior and other brands that really contribute to the main revenue coming from that part. Then the second biggest is selective retail and other activities. So these are the hotels, the department store, retail stores. That's a big part as well, obviously. Then we have watches and jewelry with brands like Tiffany. So apparently they just reopened their famous Tiffany store in New York, which they renovated for a couple of years. And they say now it's the most amazing, incredible luxury store in the world. You can see here they even painted all the taxis in Tiffany color. I mean, it must be mind-boggling. I haven't been inside yet. I'm a little bit scared to go inside because I'd rather use that money to invest in dividend funds, but must be really stunning to see and feel the luxury, because whatever they do, you really can feel the luxury and level of attention they give to their brands. Then we have perfumes and cosmetics, and lastly wines and spirits. Then we can see the revenue split by region, which is also really interesting, and it shows a nice balanced view of the entire world. It's not just concentrated on one region, which a lot of companies struggle with, but they're really balanced nicely across the world. You can see 27% from the States, then we have 12% other markets. We have 8% actually from France, being a French company. So that's good to see that the French people are obviously buying. But that of course also means foreigners coming to Paris. Paris being the most visited city in the world. Obviously they come there to have the real experience buying their luxury items from a boutique in Paris. So that's natural that there's a high number over there. In Europe overall, 16%. That's obviously without France. Then we have Asia, excluding Japan, because you can see over here, Japan alone contributes 7%. So that's a huge market for them. And then overall Asia, including China, is 30%. So really nicely balanced portfolio. And I always like that because sometimes you see a lot of company having either overdependence on Europe, on the US, or on China, but here it's really spread across the world. Even if one market was to fail, they wouldn't completely tank their revenues. They could potentially offset it elsewhere. And here you see the executive committee, obviously headed by the chairman and CEO, Bernard Arnault. But then obviously you see also some of his family members, Delphine Arnault, who has recently been appointed to head Dior. But that also brings the question, who's going to succeed Bernard Arnault? Because he's already 74 years of age. So naturally, one of his kids has to succeed him because they are a family-run organization, obviously. And I believe he has up to 5 kids working in LVMH. So one of them is going to be the natural successor of him. Some people are saying it's going to be his daughter. I don't know. But at the same time, I'm not sure it will make such a big difference because the brands behind the company are such powerhouses. I don't think it's as important who's running it as, for example, with Tesla, where really people invest in Elon Musk. If he was to go, I'm not sure the company would be as valuable. Here we talk about companies and brands that have been around for decades. They will continue to perform very strongly. I also just finished listening to the annual general meeting, which is happening once a year, where they basically come together and review the entire performance of the year. That's in addition to their quarterly earnings calls, and I always enjoy listening to those calls for the companies that I invested in or plan to invest in, and I use an app called Quarter. It's free of charge. You can download on the phone and listen to those calls and then see the slides the company presents. It's really, really powerful to get a deeper understanding and look beyond the numbers. But yes, the AGM was really nice. The slides are really good, and I always enjoy that the CEO is also speaking, because here you basically get to listen to the richest man in the world, see his vision, how he thinks, and it was really insightful for me. And obviously in this meeting, they reviewed the 2022 numbers. Just look at the operating margin of 26.6%. I mean, that's really a great margin to have. And I really like the graphs because some companies, when you look at the reports, you have more questions afterwards than answers. And here they really make it clear how much was their revenue year-on-year growth. In total, it was 23%, but they actually break it down and showing that yes, they did have 6% currency gain. Still, the main part comes from organic growth by 17% year-on-year for such an established company, which is really great to see. Also nice to see that they talk about dividends and really highlight it over here. You can see currently you're getting 12 euro dividend per share. I mean, that's really a high dividend. Just a few years ago, it was only at 5 euros. So that's a compound annual growth rate over 5 years of 19%. So really, really good to see. And in general, I really enjoyed the call and the comments they made during the Q&A session. They highlighted multiple times that they are the biggest taxpayers in France. And they're really proud of the fact, and they rightfully should be. Because when people say, who needs all this luxury, we should better give back to the people. Actually, they do that because they are the biggest taxpayers. Not like some of the tech companies that operate globally, but really minimize their tax payments. They are by far the biggest taxpayer in France. And that money obviously does come back to the people after all. You can see here the price, currently $960. Obviously, it's based in Paris. So in euros, it's actually priced at 885 euros currently. And that was actually also one of the nice anecdotes. One of the shareholders during the meeting asked the board, the price is getting so high. As you can see here, a couple of years ago, it was way less at around $200, then went up to $300, $400. Now at almost $1,000, makes it very expensive. And he asked, wouldn't you consider a stock split like some of the other big tech companies did in order to bring the price per share down and make it more attractive? And I believe it was the CEO that answered, absolutely not. He said, we are a luxury company after all, and owning a share should also become a luxury. So really playing on the desirability aspect. But as you can see here, really a success story. Over the 10 years, 450% gains. When we look at the dividends, it's actually paid out semi-annually, so twice a year. As we've seen before, a very nice 5-year compound growth. And currently the dividend forward yield is 1.6%. So it's not the highest, but still quite attractive given the fact that you will be owning such an amazing company. So in terms of dividend growth, there was times when they did cut the dividend a little bit. You can see over here in 2020, they dropped it by 22%. And honestly, some people say, well, once the company starts cutting dividends, that's the end of it. But here you can see it's definitely not the case. They grew the revenues so nicely afterwards. And I really think it was actually a smart move because instead of over leveraging themselves, taking expensive debt just to pay a dividend doesn't make sense. Instead, they reduced it, they saved some money, and they could later redeploy that money for further growth, as we saw over here. And obviously, we all know what happened in 2020. A lot of their boutiques were just shut down. Nobody could go and shop. They're not really so strong online yet. They're establishing this more and more, but the real experience happens in their stores. And obviously, as they couldn't operate, they still managed to pay a dividend. So that's really nice. But even with that cut over a 5-year period, as you can see, they really grew the dividends very strongly. And when we compare the performance of LVMH versus the S&P 500 over a 10-year period, and we talk about total return, so that means reinvesting the dividends, you can really see how strongly they outperformed even the S&P 500 that only grew by 210% over a 10-year period, while LVMH grew by 581%. So a real success story there. Heading over to Dividend Watch, which is my favorite dividend income tracker of choice. As you can see over here, I own just shy of 1 share of LVMH. And with that holding, I get an annual income of around 10 euros from them. Now, as you probably figured out by now, I really love this company and definitely want to own more of their shares. But at the moment, I just find them extremely expensive. As you can see on the 52-week range, they're currently towards the end of it, meaning they're close to their 1-year high. And yeah, as you can see here, the trajectory has only been going up for quite a while. So hopefully after the next dividend has been paid out, usually such companies, they do see a little retraction in the stock price because some people just invest for a dividend and then afterwards sell the shares again. So hopefully I'll see a little bit of reduction in price over there. I honestly don't think it's going to drop massively. There might be a little corrections here and there, but I don't see them really dropping by 20, 30, 40% anytime soon, because you can see even through difficult times, the recession we went through already and so many challenges globally going on, they're still producing incredible revenues, and it just shows you the resilience of luxury goods. And that's why I definitely want them to be part of my portfolio, especially considering that China only recently started really opening up and started to travel again, and they have a huge desire and the necessary funds to invest in luxury goods. And when you go to any boutiques, Louis Vuitton stores, Christian Dior around the world, I've recently been to Barcelona where there was a queue of 500 meters of just Chinese people queuing to get into the store to spend thousands of euros to buy the latest fashion items. So I can really see huge potential in this company going forward, and they're not slowing down anytime soon. They have been making some smart acquisitions in the past. Companies like Tiffany & Co. was only added a couple of years ago and already started boosting their revenue. So they're really smart, they have a long-term vision, and I really love the company. I love the industry of luxury in general. While I would consider myself a simple, down-to-earth guy, of course, who doesn't like a little bit of luxury? At least the experience whenever you walk in such stores is really amazing. So I really suggest you, even if you don't want to buy it, just walk into any of their boutiques and you really understand the true meaning of luxury. And if you are a shareholder of LVMH, next time you crack open a bottle, make sure you buy one of their brands, so that money comes basically back to you in the form of dividends. Next up, check out this video over here. I hope you enjoyed the video. If you did, please give it a like, subscribe to the channel. It means the world to me. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.